Welcome back to Robinhood Stock Market Watch List. This is our live meeting. My name is Carlos, and today is Sunday, 29th of January, 2023. Our live meetings usually pertain to learning, training, or to ultimately to plan ahead. One of the key things a lot of the pro traders and investors say is to always plan our trades and trade our plan. One of the things that Benjamin Franklin used to say is that if you fail to plan, you're planning to fail. And so, and that is why I find it very, very critical that we do a lot of these meetings and a lot of these things that we do in our particular stock market group, the Robinhood Stock Market Group, which has about 250,000 members. We are one of the most popular, most active stock market group on Facebook. And so that just makes us really, really successful, and we're always doing more. So one of the key things as we do our weekend due diligence is to pretty much always follow the money. That's one of the other key things a lot of the pro investors and traders say, but that can mean a lot of different things. And which is what we're going to talk about. But one of the key things that we like to do when we do our due diligence in the weekend is to figure out what each day is going to be like throughout the week. And if you've been in our previous meetings or watched any of our recorded sessions, it's amazingly accurate by like 80 to 90% as we plan. I mean, things can happen unexpectedly, but it's just amazing to know what's going to happen before it happens. And it's so accurate, and that's why we like to talk about it. But as we follow the money, we learned that the biggest things that have the biggest impact on the United States stock market is economic reports. And so as we follow that, one of the best websites and applications that we use is a website called investing.com. So there's an economic calendar that you can click on, or there's a calendar feature, I think, under the menu area if you're using the application. Once we're in the calendar area, we need to configure it a little bit. Otherwise, it's going to show a lot of gibberish. We can do that by, first we need to click on this week, and then filters. We need to click on the filters area. We need to clear everything, because there's only two things that we need to see, and that is a check mark under the United States, and then under importance, you'll notice there's a 1 star, 2 stars, and a 3 stars. We want to put a check mark under 3 stars because we're telling the system that we want to pull everything that is going to have the biggest impact on the United States stock market. Once we click apply, it's going to refresh that information, and then boom. This is gold, you guys. If you guys are not using this, I highly recommend that you start, and that is why I'm showing it to you now, and we're going to go over it and kind of decipher it. That way it'll make a lot more sense. And look at this week. This week is scheduled with a lot of stuff. And so, but Monday, so typically there isn't anything usually scheduled for a Monday or a Friday. Usually the majority of these economic reports are on a Tuesday, Wednesday, and a Thursday. But Monday is going to act as a day to kind of like a chill day or a like a wild card or whatever. It's going to absorb either the volatility from Friday as well as maybe weekend news. And so I don't really think there's enough weekend news to create a lot of volatility for Monday. So Monday could act as a day where it can kind of kind of respond to Friday's activity. And a lot of people are anticipating bearish characteristics, even though when we look into options activity, it seems like a majority of investors and traders are more bullish than bearish. And so they're betting that the momentum's going to continue Monday morning. Or at least be flat or whatever. But a lot of people on social media are thinking Monday is going to be bearish because they're thinking that the market must come down before it can keep coming up. And they're right. And so but either way, ultimately it's a 50-50. It's a coin toss. And so, but going into Tuesday, when we're looking at these dates and times, it's important that you know exactly what time that they're going to be released in your time zone. Because if you're looking at it on the website, it's going to automatically default it to the Eastern time zone unless you change your time to your time zone. But if you're looking at it on your mobile device, it's automatically going to adjust the time for your time zone. So just make sure that you're completely aware of what time, because we need to know, is it going to be released before the stock market opens, or is it going to be released after the stock market opens? And so the first hour and the last hour of the day are always the most, has the most activity. It's the most volatility. and so we need to know if it's after the market opens. We need to know, is it going to continue more volatility longer beyond the that 1 hour? And these, the government, schedules these precisely the way that that they want them to create certain volatility with the market. And what I mean by that is because we see a lot of reports that'll be reported before the market opens and then right after the market opens. And then before the market closes, we have like press conferences, or the White House or the Biden or whatever has a speech or something, and they're going to talk about the economy or whatever. These are things that are scheduled to create more volatility during power hours. So it's just more things that we need to know rather than relying on news applications. They're doing what we're talking about right now. They're being aware of these dates and times of what's going to happen. That way they can post a news article. And if you're relying on those news articles, you're leaving money on the table, as well as missing out on opportunities, because the market is already reacting to it. And you may have received the notification 5-10 minutes or an hour or so after the economic report has been released. So that's why we do not rely on the news applications. We do this ourselves. And so the Tuesday economic report at 10 o'clock, so this is 30 minutes after the stock market opens, is the CB Consumer Confidence Report for the month of January. Now, the more rare these reports are, the more of an impact it's going to have on the stock market. And what I mean by that is that we have our weekly reports, we have our monthly reports, we have our quarterly reports, and then we have our yearly reports. And so this is a monthly report, so we're going to see a good, decent amount of volatility from a majority of these. And so, and one way, so if you don't know or understand what this report is, I highly recommend that you click on it. A new tab or a page will appear, and it'll tell you in a very brief paragraph of what it is and how it will affect the stock market. And so it says here, the Confidence Board, or CB, Consumer Confidence, measures the level of consumer confidence in the economic activity. It is a leading indicator as it can predict consumer spending, which plays a major role in overall economic activity. Higher ratings point to a higher consumer optimism. Then over here it says a higher than expected reading should be taken as a positive or bullish for the US dollar, or it could be the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar, or the stock market. And so when we go back here, we need to make sure that we're comparing the forecast versus the previous. We need to ask ourselves, is the forecast higher or greater than the previous? And so this is telling the guys at Wall Street and investors all over the world that to be prepared for bullish activity or bearish activity. In this case, it is higher than the previous, so be prepared for bullish activity. And so that is what the majority uses to determine if that day is going to be bullish or bearish. I mean, that is just so easy. And if it doesn't make sense, you feel free to unmute your mic and say that you don't get it. But, this should make sense. Now, going into Wednesday, February 1st, so this is basically, a new month now. And so we have the ADP non-farm employment change for the month of January. It is expected to be reported less than the previous report. And so, be prepared for some bearish characteristics. Maybe, Monday does whatever. Tuesday, maybe the market, comes up, and then Wednesday, maybe it opens up in the red, and then keep in mind that this report is scheduled to be reported 1 hour and 15 minutes before the stock market opens. And so then after the market opens, 30 minutes after the market opens, we have the ISM manufacturing report for the month of January. And this report looks like it's also going to be a little less than the previous report. So there's another bearish characteristics there. Then we have at the same time, we have the JOLTS job openings report for the month of December, which is also less than the previous report. So we got a little, that's quite a bit, and then so we have crude oil inventories, which is a weekly report. So we have 3 monthly reports that's going to provide a significant impact on the stock market Wednesday, February 1st. The crude oil inventory report, which is a weekly report, is not going to have that massive of an impact like these 3 other ones. But we notice that there's no forecast yet. Now, as we get into pre-market tomorrow, there will be. They'll come up with whatever number that they want to come up with. But crude oil inventories is a pretty easy one to figure out. Ever since the gas prices went up significantly, we've noticed Americans, they get paid every 2 weeks. Or most Americans get paid every 2 weeks, and they fill up at their favorite gas station. They try to get it to last for 2 weeks, and then so what we're seeing is 1 week the people are consuming a lot of fuel, and then the next week that they're not. So the numbers are moving very, very volatile. And so last week the numbers were down, which these reports, such as the crude oil inventory levels and the unemployment levels, need to be down. If they're down, that is bullish. So it's a little opposite compared to the other ones, where the other ones need to be up. So if the unemployment levels are down, that means that people are working, they're spending money and paying taxes, and that helps the economy. Crude oil inventory levels, same thing. If those are down, that means people are consuming gas and oil, they're flying, they're doing whatever, that helps the economy because they're spending money. If they're up, that means that they're not, and that's not good for the economy. And so, but like I said, we should anticipate that the crude oil inventory forecast should be a lot higher than the previous, which is bearish. So far, those 4 bearish economic reports side by side. Then we have the interest rate hike decision, which in this case they're estimating that the interest rate hike should be about 0.25%. Which you would think should provide bullish characteristics, because it's less than the it's getting less, and it's where before they were doing 0.75% interest rate hikes, and then they were doing 0.5% interest rate hikes, And so if they do 0.25%, this is basically telling us that the Wall Street investors are beginning to see the light at the end of the tunnel, meaning that the bull market is right around the corner. In fact, the bull market pretty much has just started early. Normally, it doesn't really start until springtime, but we've had a very long bear market that has lasted slightly over a year, and so the investors in Wall Street are eager to get the bull market started. And in the last couple meetings that we've talked about economic cycles, we can see the market is reacting exactly the way that we were talking about. How the market reached its bottom, the market will begin to rise as the recession continues to get more aggressive throughout this year. And so if you miss that, we can always, talk about it, or I can show you, the pictures and stuff. If not, we can kind of move on. But it's always important, again, to always know what's going to happen before it happens, whether it's within the week or the coming months or years. But just know this is going to create a lot of volatility. And however, if they continue to do a 0.5% interest rate hike, that could provide bearish characteristics. But if you ask the majority, and eventually we'll do a poll to ask our group, what they're thinking that it's going to be. But we can obviously see that these forecasts have been pretty spot on. And so, if it says it's going to be a 0.25% hike, most likely it's going to be a 0.25% interest rate hike. So we could see a massive red morning, and then on Wednesday morning, and then it could easily close in the green. And and that transition is probably going to happen pretty early, sometime after 1 hour after the stock market opens, because investors in Wall Street are going to anticipate this. So just be ready and be prepared. And then going into Thursday, we have the unemployment report, which they call the initial jobless claims. This report is scheduled to be 1 hour before the stock market opens. And so the unemployment report, which is very interesting to see, it is like record low. Did you know before the pandemic and before the government shut down the economy in the second quarter of 2022, unemployment was right around 250 to 300,000 people that filed for unemployment every week. It is extremely low, but yet businesses are still having trouble finding staff. And so, but this is pretty significantly low, and just like crude oil inventory levels, there's usually a little bit of a bounce. And so since it was pretty low, most likely it should bounce up, just like this. And just like what it's saying in the forecast is telling us, be prepared for bearish characteristics for Thursday morning. Now, Friday, February 3rd, we have two economic reports that are scheduled to be released 1 hour before the stock market opens, and then we have one 30 minutes after the stock market opens. And so, but these ones are the non-farm payrolls for the month of January, and then the unemployment rate for the month of January. So they're going to talk a little bit about that, and it's interesting that they're thinking that the unemployment rate is going to be a little bit higher, even though if it's going to be a little bit lower, for some reason you'll notice that the majority of the time the stock market always reacts to the forecast, not the actual report. It's just weird, I don't know why, but we just always follow the money, we follow the majority. And so but the non-farm payrolls, 185,000, that's a lot lower than, and so that should provide bearish characteristics. This should provide bearish characteristics. But then this one's a little higher, which is after the stock market opens, the ISM non-manufacturing PMI report for the month of January is 50.3, 49.3, where previously it was 49.6. So we're just going to see a lot of volatility. This week with a combination of earnings is going to really blend in. But like I said, the economic reports has the biggest impact on the entire stock market system, where earnings that we'll get into next has an impact on those particular stocks, but also those segments of the stock market. So if there's an electric vehicle company that has earnings, sometimes it can affect the rest of the electric vehicle companies, its competitors. Or for example, AMD, which has earnings later this week, is going to affect other semiconductor stocks. And so, but yeah, this is going to be a very, very fun and very profitable week. It's all about opportunities and how to take advantage of them. So let's go into the earnings, which I just finished posting all of our earnings analysis under our featured area of our group. And if you guys can't see, my screen here, you may have to just to dig in your software there and to pull it up. But so if we click on our featured area here, we'll scroll down a little bit to look at the scheduled calendar right here, and you can see it is a very, very busy week ahead of us. So tomorrow we have the SOFI, which is going to provide a lot of volatility in the little financial segment. And then we have Tuesday, before the market opens, ExxonMobil, UPS, General Motors, and Pfizer. There are several other ones that are scheduled. And then after close on Tuesday, AMD, which is going to be one of the most anticipated stocks earnings for this week. Snap has always been a volatile one, but I don't have an analysis on that one yet. But and then Meta is Wednesday after close. That's another highly anticipated one. And then Amazon is on Thursday after close, as well as Apple, Alphabet, Google, Ford Motor Company. I mean, this is just a massive, highly anticipated week. This is the week that a lot of investors, look forward to every 3 months, and so this is huge. And so this is going to be, let's see here, starting with Amazon. Amazon here, which is scheduled again to release their earnings on Thursday, February 2nd, after the stock market closes. The company's earnings release has a 57% expecting an earnings beat. Option traders are pricing in around an 8.6% price movement. But I wanted to point something out in this here really quick. Gosh, somebody had made a comment in here, and I don't know. Okay, I don't know why it's not showing the comment. But one of the cool things about, our group that has a 250,000 members is that everyone, is when you post something like this, somebody from that company can easily come out and say something. And since my computer's glitching a little bit, I'm going to kind of post something here under the Learning Center here. Let's do, I had it here somewhere. Here we go. Okay, so this is the comment. When I posted this, hold on here. So when I posted the Amazon thing, this guy says Amazon is going to fall hard. Well, all of a sudden, John T comes out and says, I work at Amazon. December is a peak season, usually is the most busiest, but for 2022 year, there was barely any work at all. Even now, they are losing a ton of money. So the neat thing with our group, with the 250,000 members of us, is that everyone works for some kind of industry, and pretty much all industries, including pretty much every company in the stock market. So when we could post something like this, we can get some inside information, or some leaks or whatever. And so there it was, where we have an Amazon inside employee that says that they were, a lot slower than any other, previous year that they've had recently. And so, but, with our analysis, 57% is expecting an earnings beat. Normally, earnings usually have around a 65% earnings beat or a 35% earnings miss. And so that is average. Any less than 65%, we got to consider that below average. Any higher than 65%, we got to consider that above average. So this is not looking, the best for Amazon. But when you look into options activity, their majority of them are pretty bullish. But as we get closer to Thursday, that could change. But to be determined. But we'll look into more of that. Then we have Apple, which is scheduled to release their earnings as well on Thursday after the stock market closes. The company's earning release has a 42% expecting an earnings beat. I don't think I've seen Apple that low in a long time. And so option traders are pricing in anywhere between a 4 maybe 5% price movement in either direction with this. And so be prepared for some volatility with a lot of these tech stocks. Sophie, which is again confirmed to release their earnings tomorrow morning for Monday, January 30th. This company earnings release has a 64% expecting an earnings beat. Option traders are pricing in a lot of price movement with this one at 15% in either direction, but 64% should be in the upwards direction. Now here we are with AMD. AMD, which is scheduled to release their earnings on Tuesday after the stock market closes on January 31st. The company's earning release has a 49% expecting an earnings beat. At that point, we're basically at 50-50. This thing can go either way, where option traders are pricing in a lot of a price action with this one, right around 4.5% or 8.5%, where normally it moves around 4%. And so we're expecting more volatility from this one. But a lot of people are pretty bearish with AMD. I mean, I don't blame you, 49%, but we got to stay logical too, for a couple different reasons. So, Intel, missed their earnings. They suffered. A lot of microchips companies did not do very well. But if you are building a computer, and some of you probably have, some of you are pretty techier than others, but when you're building a budget computer, the microchips that you plan on building with is going to be AMD. AMD probably sells more microchips than really anyone else when it comes to computer processing power and whatnot. It's highly effective. They're very powerful, and they are it's very cost effective compared to an Intel chip. However, when it comes to computers, people just aren't buying computers. A lot of you guys don't even have desktop computers anymore, which is, that used to be the thing. There was always a desktop computer in every home, and then, but slowly, tablets and smartphones just replaced it. Some people may have laptops and stuff, but so it is hurting the microchip segment, and we could see that. But we still have a little hope for AMD because it is one of the most popular microchips because it's very powerful and very cost effective. But just be prepared to see a lot of volatility with these. But we can use this as a lottery play too. If you're into stock options, we can straddle this one. If it does move this way, this could be very profitable. Or as a lottery play, if it doesn't move within our plan, then it could be a what's called an implied volatility crush, also known as an IV crush. That basically means if it doesn't go according to plan, both our calls and puts or going to devalue itself automatically, very, very quickly. And so, but this is when we're looking for lottery plays, those are things that we invest lightly into because it is a high risk, high reward situation. If it does work out, you'll be highly rewarded. And so, but that's why it's important that we try to look for lottery plays that will be more in our favor, and otherwise looking for scheduled volatility. Next is Meta, or formerly known as Facebook. And so Meta's is scheduled to report their earnings on Wednesday after the stock market closes on February 1st. The company's earning release has a 39% expecting an earnings beat, which is very, very low. Option traders are pricing in a lot of volatility with this one at right around 10%, which it has moved quite a bit like that in previous quarters. And so we're expecting social media stocks to be very, very volatile following Meta's report. And so this is another one to add in if we're looking for a lottery straddling play. And so then there's Alphabet or Google. They're scheduled to release their earnings on Thursday after the stock market closes. The company's earning release has a 54% expecting an earnings beat. Option traders are also pricing in around a 6% price movement with this one, which it has normally before during our our bear market. Before that, Google never used to move quite like that. It used to move around 3.5%. ExxonMobil is scheduled to release their earnings on Tuesday morning before the stock market before it opens on Tuesday morning. So the company's earning release has a 74% expecting an earnings beat, which is probably one of the highest percentages out of any stock scheduled this week. But energy has been doing very, very well, ever since, basically, Russia began its invasion with Ukraine. Energy has been a very, sensitive, subject, and it's just been doing very, very, very well. And so, but there's a lot of news articles about how gas prices and energy could continue to rise, this year. And so, but option traders are pricing in around a 3.9, almost a 4% price movement, a little more than its average. UPS, which I don't know if you've seen some of these UPS and FedEx trucks, but they're driving around U-Haul trucks. So I'm not sure. I mean, there's still a shortage in parts. There's a shortage in microchips. There's a shortage in metal materials and everything. And so, the companies and rental companies, that they just can't get enough vehicles anymore. So that could easily, hurt their business. But the UPS is confirmed to release their earnings report on Tuesday morning before the stock market opens. The company's earning release has a 55% expecting an earnings beat, while option traders are pricing in around a 6.5% price movement, which is a little more than its average. So we are expecting a little more volatility with UPS coming up here on Tuesday morning. Next is General Motors. General Motors, which is confirmed to release their earnings on Tuesday morning as well, before the stock market opens. The company's earning release has a 51% expecting an earnings beat, while option traders are pricing in around a 7% price movement with this one. And if you're trying to avoid, implied volatility crush or IV crush, and you're wanting to do a straddle with one of these, again, you can always do, maybe it's a competitor that doesn't have a earnings report, and so if you wanted to take advantage of General Motors but don't want to be affected by implied volatility crush in case if it doesn't move at all, you can go with like Ford Motor Company or something. Or you just got to do the opposite. You got to do the counter part of its of that particular brand. And so Pfizer, just like Pfizer or Moderna, Pfizer, which is scheduled to release their earnings on Tuesday morning before the stock market opens. The company's earning release has a 56% expecting an earnings beat. Option traders are pricing in around a 4.5% price movement, where normally it moves around an average of 2.9. So we're expecting more volatility with this one. And the government's been promoting more of those not vaccine, I call it a flu shot because that's what they are. That's a COVID flu shot. And so, but they're promoting more of that, and so that could easily help, Pfizer's sales as more and more taxpayers fork over the bill. However, when we do our due diligence, it's important that we also look at the top 5 things to watch. That's posted by investing.com. They post this every Sunday morning. But I also want to post out point out scheduled IPOs this week. Now, it's something that we've been monitoring often ever since you guys requested that we create an IPO chat room. Every weekend I'll post the scheduled IPOs for this week. Now, though this week has a lot more scheduled IPOs than average or previous weeks. So, we could be, as we're, kicking off a new year, we may be seeing a lot of new companies. Now, a lot of the companies, IPOs, are usually, lame ones, like pharmaceutical stuff, penny stocks, things like that, which, ultimately we want to avoid. But there are, I've noticed that there were a few other ones that may have potential. And so, especially when you see something like this that says space, we need to do some research on that. Now, it says last price that they were thinking about was going to be $1.06. Usually we want something a little more expensive. Again, we want to try to stay out of the whole penny stock thing. But, if it has to do with technology, this could be massive. So we need to know about it. And so this is something, as part of our homework for this weekend, we need to look into some of these here. So this was one of them. Sidus Space Incorporated. Let's see. Let's go down. Elephant Oils. Maybe is this like a brand new oil? Is it an energy company? If so, we need to know about it because investors are probably going to want to pump it up. And so, and it's $4.15 to $4 to $5, priced in. We have about 1.83 million shares that they're offering, and then we have, looks like some more Chinese IPOs, and so Lucy Scientific, not sure what that is. We'll have to do some more due diligence on that. Real estate, not so much of a good thing to probably get into just yet, as interest rate hikes are still going up. But, the news is trying to manipulate the market a little bit, saying, housing is fine. People are still getting mortgages, blah, blah, blah. We get the economic reports. You can't bullshit a bullshitter. When we see the economic reports, we see everything that's going on. When the news company tries to manipulate it, we can see whether they're telling the truth or not. And, housing and everything is going down. Housing sales, all that stuff, it's low, and it continues to get low month after month. And so that would be one to kind of avoid. Not sure what that is, or but let's go on to the next page here. Nava Health, so that's probably pharmaceutical. Bullfrog Holdings, could be a financial thing. Light Group, not sure. Let's see, Ultimax Digital. I have to double check what that is. $4 to $5. That could be a good one. You just got to look more into it, see what it is. But then we have the NFT gaming. Now, NFT, that's what crypto related, and then gaming. So this could, and it's priced in at $4.15. This could be one of the things that could create a lot of popularity. And so I just wanted to point that out, that this is going to be coming out towards the end of this week. And so the news media could be talking about it. Social media may be talking about it. It's going to the new ticker is going to be NFTG. And so we could start seeing a lot of activity on this. And again, always be aware of what's going to happen before it happens. Let's go on to the next one here. And then we got another probably pharmaceutical health thing. So again, it's really, really important to look over. And then we'll go into the top 5 things to watch posted by investing.com. As we do our weekend due diligence, we like to double check this one just to make sure if there's anything that we might have missed. And so they're saying it's set to be an action-packed week. Hold on here. One of your mics are not muted there. It's set to be an action-packed week as 3 of the world's largest central bank hold policy meetings, and 3 out of the top 4 United States companies by market capitalization are set to report earnings. While the Federal Reserve is expected to slow the pace of interest rate hikes, the European Central Bank and the Bank of England are both expected to hike rates by 50 basis points. Friday's United States jobs report will also be in the spotlight, and markets in China are reopening after the Lunar New Year's holiday. Here's what we need to know to start our week. Number 1 is the Fed downshift. Will the Fed continue to slow the pace of the rate hikes in the face of the cooling inflation or stick to its guns? Market watchers are widely expecting a 25 basis point or a 0.75% or a 0.25% rate increase on Wednesday to a range of 4.5 to 4 3/4, slowing the size of the increase for a second consecutive meeting. Investors will closely watch Fed Chair Jerome Powell's post-policy meeting press conference for any indications of how much higher rates will rise and when officials might consider a pause. Meanwhile, Friday's employment report is expected to show that the economy created 185,000 jobs in January, slowing from 223,000 the previous month. While the unemployment rate is projected to tick up to 3.6%, average hourly earnings are expected to slow slightly from the previous month. Economic calendar for the week also features a report on job openings for December on Wednesday, along with the ISM PMIs. Number 2 is the EC or the ECB to hike, or the England central bank hike its rate hiked 0.5%. It says right here a rate hike of 50 basis points to 3% from the England central bank. While it meets on Thursday, looks like a done deal, but what happens next remains unclear. Market watchers will be on the lookout for indications of how much further and how fast officials intend to go. The ECB president, Christine Lagarde, will likely remain hawkish as core inflation remains stubbornly high. Despite growing dissent among policymakers, with more dovish voices urging or arguing that the inflation has retreated from record highs. Policy hawks are pushing for more of the same in March, with inflation still well above the ECB's 2% target. But before Thursday's ECB meeting, the Eurozone is to release its fourth quarter GDP on Tuesday, which is expected to show a small contraction, which will affect the U.S. futures on Monday night. The bloc is to release the inflation data for January on Wednesday, which is expected to have slowed for a third straight month. Now, the Bank of England, to follow the Fed and the ECB, the Bank of England, the first of the major central banks to begin its hiking rates, is expected to deliver its 10th rate hike since December 2021 on Thursday. And so officials are widely expected to raise the rates by 0.5% to 4%. Headline inflation moderated in December to 10.5%, but it's still over 5 times the bank's official target, and wage growth remains persistently high. Market watchers will be looking out for indications of whether policymakers think they are near the end of the tightening cycle. Money markets are currently expecting one final 25 basis point hike in March, which would take the bank rate to a peak of 4.25. So number 4 is the earnings, which we pretty much went over. And then number 5 was the Chinese markets return. The Chinese financial markets will return after the week-long lunar New Year holidays and will look to pick up where they left off. At a 5-month peak for mainland blue chips, holiday travel inside China, surged 74% from last year after authorities scrapped the COVID restrictions. And so, so just be prepared for just a lot of volatility with, Chinese stocks are pretty much going to be like your Alibaba, Neo, and a few other, large market cap stocks. So again, it's always important to be aware of what's going to happen before it happens. And one of the things to go along with that is to always know if there's going to be a press conference and if the president is scheduled to say something, because both of those create a massive amount of volatility, and both of those are typically scheduled for either sometime either in the middle of the day or during power hour. Power hour and the first hour of the day are always the most volatile times of the day and provide the majority of the volume. Most activities, meaning the most buying and selling activity. And so when we look at their schedule, we can see, like, for example, Friday, at 1:30 p.m. Eastern time. So depending on your time zone, you may have to reconfigure this a little bit so that way you are aware of what time it's going to start in your time zone. Now, it's important to pull this information up live 15 minutes before it's scheduled by going to YouTube and type in, if it's a press conference like this, you type in under YouTube, White House Live. You're going to find several scheduled live YouTube channels. It could be Fox, it could be the Washington Post. I mean, it could be all kinds of, and sometimes they're not quite live until until the speaker comes out. Sometimes it is live. You can kind of eavesdrop into some of the journalists and listen to what they're talking about. But also sometimes there's a guy that'll come out and say that it'll start in 5 minutes. So that way we can kind of be aware of when it's going to happen, because if you are depending on the news for this information, they're gonna chop it up, meaning where they're only going to show you what they want you to hear. It's a different experience when you're watching this stuff live, because you're getting everything. You're getting the whole reaction. You're getting listening to what the journalists are saying. You're getting the response of the speaker. You're getting their facial expressions. You're getting their body language. I mean, you're getting everything. And so it's just part of those things that you just can't bullshit a bullshitter. So we know whether they're telling the truth or not, or if they're trying to beat around the bush, and so and a lot of times this stuff affects the stock market. But one of the key things to look for is that because a lot of times we'll see a massive dip when all of a sudden they come out, they start talking, we see a massive dip within the first 5, 10, 15 minutes. And then all of a sudden, the market starts to rebound and starts to recover. When it starts doing that, we know that it's going to recover all the way up until power hour. Unless it keeps coming down, then that means that most likely they've said something that investors did not want to hear. In other words, they spooked the investors in Wall Street. They could be talking about World War III or what this and that. But then again, a lot of this stuff that's going on, giving tanks and whatever, a lot of the enthusiasts say that war is good for business. It helps the economy, creates jobs, blah blah blah, and so that could be one of the things that we're seeing with the market. But if the investors start getting any kind of feeling of a possible increase chance of a World War III, then we're going to see some massive, bearish characteristics. And so, but a lot of the moves are being placed around, in the last week. I don't know if you guys know, but there's been a lot of reports of Russian spying ships around both sides of the United States, right around Hawaii to the east coast of the United States. They're being spotted, though they're not being really promoted on the news. But if you YouTube it, Russian spy ships, you should find a lot of videos and a lot of people talking about it in the last week. So as things are progressing more, we need to focus on all these government schedules, whether it's economic reports, whether it's the press conferences, or if it's Biden who's scheduled to say something. Now, press conferences, it doesn't matter, whatever that they have scheduled to say. The journalists kind of have a big impact on the whole thing, because we have to assume what they're going to say, what they're going to ask. And so, because you got to pretend, if you were a journalist, what would you ask the White House? And that question could result in an answer that could spook investors. And so, but we could see something else, let's say like this right here. So on Thursday, the 26th, we have the president delivers remarks on the economic progress since taking office, blah, 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 blah. And this is scheduled to be released, during Power Hour. And so we know that he is trying to pump up the stock market during Power Hour. He's going to talk, I'm doing great in the economy, all these jobs, all these blah, 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 But either way, whether you like the guy or not, the words have an impact with the stock market, and that's what we care about. We care about, will it affect the market or not? And so with this, that affects the stock market. So we got to care about it and how it will affect the stock market. Now, the market does not like Joe Biden. And so whether he wants to take credit for things or whatever, you'll notice that he's trying, but it still has a bearish impact. And once he's done talking, then all of a sudden the market begins to recover. So these are those kind of scheduled dips that we have to be aware of. And if you're not using this, you're leaving money on the table. You got to use this. Your goal is to be a pro trader and a successful independent trader and investor, where you don't need anybody but yourself, and then us as your phenomenal, stock market team. Because every pro trader and investor specializes in something different. So it's nice to be able to work with a group of investors like yourselves that specialize in something different. That way we can all bring something phenomenal to the team. And so that's just what helps make us grow. And that's why it's important that everything that we offer in our group is for free. We never charge anything for it, because when you charge people for things, all we're going to get is new people with a low amount of experience. But when we offer things for free, we get those as well as people that are heavily experienced, people that have been doing this for 5, 10, 20 years, 30 years, that want to be a part of something great. And that is why we do these. Now, going into, let's talk about the next thing is quantitative tightening. Quantitative tightening, which is when the government sells stocks that they bought during quantitative easing. They do this all the time during every cycle, the stock market or economic cycle, where they buy billions of dollars worth of stocks and they sell billions of dollars of stocks for financial gains. Helps the economy, helps the government. And so, but it can create bullish activity, it can create bearish activity. Now this started. They started selling the stocks last August, September, and they did it pretty massively, meaning where they sold a lot at once. And but we're seeing the numbers down a little bit, but we're noticing it's not creating that much of an impact on the stock market. But it also depends on when they execute it. There's three scenarios that can take place. Now, these are scheduled to be reported on pretty much every Tuesday and every Thursday up until a few more months. But the three scenarios that can take place is that they can execute this during pre-market, which will all of a sudden we'll see a massive dip like out of nowhere, or they can also do it sometime during the market hours. The third scenario is where they can execute this during after hours. They can even do it the last second at after hours, making it look like that it never even took place. But it will have an impact on the stock market the next following day. But when they do it during after hours, like for example, with these big numbers here, if they do it during after hours, it softens the blow because there's very little activity going on, and then the next day during pre-market, it kind of absorbs more of that volatility. It gives it time to cool down, to cool off, to stabilize. That way it can resume. And so they're doing these kind of precisely the way that they want to try to make it seem like it's not providing that much bearish characteristics. But we still have to be prepared that they could execute these at any given time, during these days. And so, and that's why a lot of us straddle. That's one of the reasons why I heavily recommend to always straddle both calls and puts, because the market can easily be intercepted by news or other events, world events, and so that can easily create a massive amount of bullish or bearish characteristics. But when we have our bases covered, straddling meaning we're betting the stock goes up and we're betting the stock goes down at the same time. I know it seems like it'd be conflicting. Why would somebody bet a stock goes up and down at the same time? That doesn't make sense. Yes, it does. Let me show you. And the reason why I say that is because you can only lose what you have on one side, but your gains on the other side are potentially unlimited. And I'm going to show you. Let's see, I think I put it over here and there. Okay. So this was AMD just the other day. AMD, which was at, let's say, $76. It was up $6, blah, blah, blah. And so, but if we would have straddled the day before, it was right around $70. So you would have gotten your $70 call and your put strike price, okay? Okay, and again, as I said, you can only lose what you have on one side. That means you can only lose what you put into it. You can only lose 100%. But your gains on the other side are potentially unlimited. That means you can gain over 100%. You can gain 200%. You can gain 300%. You can gain 5,000%. And you're going to see that a lot in our group because as we're entering a bull market or bull season, people are going to do great because people always love betting upwards. And so you're going to see thousands of percents of these gains and whatnot. But we don't want to make any mistakes. We don't want to take a step backwards. We always want to take a step forwards. And the only way that we can do that is by always straddling heavily daily using our guidelines. And I'll go over the guidelines for you in case if you've never seen them or went over them. I do post them often, at least every week, in our group. Okay, here. Rule number 1, always straddle heavy on the top 3 stock options. So that'll lead us over to where do we get that information? Where do we see the most active stock options? So that's a website we use. A majority of us use barchart.com. Under the barchart.com, under options, we have the most active options. This information pretty much updates when the market's open. It's brilliant. It's beautiful. But we want to start focusing on it usually with after 1 hour after the stock market opens, and it updates every 15 minutes after that. This is our radar. This is our guide. This is our scanner. But you'll notice that both Tesla, Apple, and Amazon are regularly on the top 3. So that answers the first question. What are the top 3 stock options? It's right here, especially if we look at this information regularly every day, though number 4 and number 5 usually changes. Though usually they are semiconductors. It could be NVIDIA, AMD, Intel, or whatever. But they do rotate, just depends on which stock wants to become active. But usually it's always Tesla, Amazon, and Apple. Now, eventually, that could change as maybe other companies start to fail, other brands become more successful, and just like any other athlete, whether it be a UFC fighter, boxing, whatever, or a golf, there's always like Tiger Woods, somebody usually always has their time to shine, and then it's the next guy's turn. And so that will happen the longer you become a successful investor and trader. And so, but we have to adapt to those changes. For example, Amazon was never always on the top 3 consistently. It was usually on the page, but it was always on the bottom up until they did their split. Because Amazon used to be $2,000-$3,000 a share. It was too expensive. That was one of the reasons why they did a 20-way split, is so that way they became more affordable, because they were thinking that they would have more volatility, it would be traded more, even though originally that's what Jeff Bezos wanted to try to avoid. He wanted people to buy and hold forever as a retirement, but again, it just became too expensive. And so these are the top 3. You can easily see it within the options volume, which is always the current day's buying and selling activity. It always resets every day. But we can see within this information here, we can see a calls and puts percentage. Again, always follow the money. We can see where they're betting their money. And a majority of them are betting, over 60% are betting that these stocks are going to continue to go up either for that current day as well as maybe the next trading day. So that can provide us clues of what the next trading day is going to be like. So 60 to 70% are most likely bullish for Monday. They believe it's going to keep going. And especially with Amazon. And but when we look at this regularly, we know what's normally on here and what's not normally on here. But when we look at a stock that's not normally on here, like Coinbase, we can maybe look at this as maybe unusual activity. Especially if there's something that's really, significantly with a high percentage, whether it has a high percentage put ratio or a high percentage call ratio. And for example, NEO, which has almost an 84% call ratio, which is way above average. Average should be right around 65%, just like earnings, like the earnings report that we were talking about earlier. You can see a lot of 60, 65%, that's normal. But during a bear market that we were in, is usually 50%, 50-50. But as we're talking about, opening up the Chinese, markets and blah, 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 again, Chinese stocks we're going to see this. We're going to see, a lot of volatility. We're going to see higher percentage call ratios because investors are bullish. Again, we got to know what's going on. We got to know what's happening before it happens. And then there's Alibaba, even though Alibaba's down Friday, but we have almost a 68% call ratio. They're buying calls because this is a great opportunity, thinking that it's Chinese stocks are going to be bullish going into this week. And we confirm that with investing.com. And so, but there's other areas we can also go to within the website here, such as the option volume leaders. Even though the most active options gives us a summarized activity, Again, this is like our overall radar. Nothing can get past this. This is our radar, but we can also look at the option volume leaders, which provide us the most active individual calls and puts. This is why we can try to weed out anything that's expired, because a DTE basically means the number of days until that particular option has expired. So we want to look at things that are currently active. So going down to this list, the one that is currently available is this Tesla call, which currently Tesla is about just under $178 a share, but we have a $200 call strike price. That means these investors are very, very bullish going into Monday as well as this week. This $200 strike price expires February 3rd, or approximately 7 days from last Friday. But you'll notice you'll see volumes at 107,000, but the open interest is just under 10,000. And if you're new to stock options, I'm sure you're aware of what volume is, but open interest is basically the total number of open contracts that have been traded but not yet liquidated via offsetting trades. That means that prior from Friday, we had about 9,999 people that bought and are holding that have not sold yet. Now, all of a sudden, when we see the next trading day, like Friday, all of a sudden had 107,000 in volume. That means this is pure buying activity. Pure buying activity. This is like 99.99% buying activity. They're buying it and not selling it. Now, going into, there's going to be some day trading, but going into Monday, you'll notice that the open interest and the volume is now accumulating. It merges with each other, so this is going to be significantly higher. That'll tell us who remaining is currently holding it going into the next trading day. And so we're going to see a lot of people selling, securing their gains, because they absolutely are betting that Tesla is going to keep going up, and particularly for Monday, because it really affects the next trading day the most. So going down, we have $180 a call strike price with the same expiration date, very low open interest, and now very high amount of volume. So, that is just a lot of bullish investors right there. And then $175 a call strike price. This one is in the money, meaning where the share price has passed the strike price. Same expiration date, a lot of volume, and low open interest is showing a lot of new, fresh interest. And so there's a Tesla call, another one, $170 one, and then we have a $160 put strike price. For those that are straddling, they're covering their butts. And just in case if Monday is affected by bearish news, weekend news, that this will help offset the loss from the calls. There's too many people, especially new people, that are optimistic, that are using the hope system. And as we've talked about this in the past, we never use the hope system. We always got to be certain. We always got to cover, our bases, and we always straddle no matter what. Though we can offset the straddle. The straddle doesn't always have to be 50-50. It can be 60-40. Or maybe 70-30. As long as you are straddling, that is just absolutely highly critical to your success. We cannot always pick one direction, because sooner or later your luck is going to run out. We do not rely on luck. We do not rely on hope, because we always rely on a structured system that will never fail us. It always gives us something to work with that allows us to gain from it. Then we have ATVI, which is the Activision, which is currently at $76.61. We have an $85 call strike price that expires in approximately 48 days, or on March 17th. Now, let's change this up a little bit. If let's say that you just you work a lot, or you just can't spend enough time looking at the stock market, and you have to buy and you have to hold. Well, there's a trick to this because a lot of this is pretty active stuff. This is a lot of day trading and swing trading stuff. But maybe you're more of a long-term investor or short-term investor. But we can utilize this. This is still a gold mine, but we can still utilize this information for your strategy for short-term and long-term investing. So this page automatically defaults to volume, sorts it out by volume. But click on open interest. We'll sort it out by open interest and then refresh the page. And then all of a sudden, the whole entire system is now sorted out by open interest. This is telling us who's holding what for a decent amount of time. Now all of a sudden you'll see the days until it expires is much greater than either 0 or 7 or 48 or whatever. So we have a lot of 48s, 83, 721 days. That's 2 years from now. But we have several months. Here's a year for American Airlines. Here's Ford Motor Company. So here, for example, Ford Motor Company is currently at $13.27. It was what, at $12 last week. It was $11 a week before. And so we're again, as we're entering the bull market, bull season is really right around the corner. We're still in this transitional period. But Ford is still building these factories, these mega factories. Well, I think it's like 2 of them. One to build more vehicles, one to build batteries or recycle batteries. We have a $20 call strike price that expires next year, next January. And so if you buy shares of this or calls, it doesn't matter. But even if you buy shares of it, whether you bought it at $11, $12, $13, and if it gets to $20 and back to $25, where it was before Russia invaded Ukraine, you just like doubled your investment in a year. Not only are you holding on to an asset that's appreciating, but it could be a stock that's paying dividends every 3 months. So you're going to double in your investment, and they're going to pay you every 3 months just for holding their shares. So again, there's just a lot of great strategies that you can utilize. You just need the right information and the right know-how. But maybe there's some stocks that you're holding. Maybe you're holding on to American Airlines or especially AMC, because AMC is one of those manipulated stocks that is going to continue to be manipulated. You're going to get a lot of people that are holding AMC that's going to try to manipulate others to continue buying more, when we're seeing that this is, the most, people are buying a lot of puts on AMC. They're very, very bearish. I mean, AMC right now is at $5.51, but they're buying $2 and $3 strike prices that expires in a couple months. And so, maybe they're expecting some bad earnings during the next earnings report. And so, but yeah, I mean, if you're holding shares, you're like, you better get out, because people are heavily betting against it. Even though you may think you're bullish on it, these investors are not bullish whatsoever. Again, part of our rules is to always follow the money, and this is where the money's going. And so, yeah, these are just really great, tools and tips and tricks that can be used as part of your advantage. Now, one of you guys have wanted to go over something very, very important. I'm going to post it really quick if I can find it here. Okay,
I have a question.
Yes.
So most of the stocks on the top of the option list this week looks like the stocks which are will be companies which will be reporting earnings. So according to the rules, they are out of question to straddle on them. So it's only left is a Tesla.
That is correct.
But I have another question. Why never on this top 10 SPY is not there? It means is the playing SPY straddle smart, or it's not?
So
Or SPY should be just played on a direct, call or put.
So let's go over that. That is a great question. I'm glad that you asked. And so I do want to point out that SPY is what's considered an ETF, not a stock, even though it may be in our stock applications. But it's still considered an ETF. And when we're looking at ETFs, we'll have to switch over to that. But and you will see that SPY is definitely holds the majority out of the rest of the ETFs, where QQQ, which is kind of like your subdivision of your NASDAQ, is going to be second place. Now, the majority of the ETFs have 3 expirations per week, where stock options has an expiration that's once a week every Friday. So typically when we're looking at ETFs, this is mostly going to be day traders activity, not so much swing trading activity. Because the options expire a lot more, these types of strategies, people are getting in and they're getting out. And they're not really holding as much. And so, but because of that, if you are holding, you'll notice that the ETFs have a lot more time depreciation. So if you're holding longer than what you should, you're going to notice that it's going to depreciate very, very quickly. But it is a very volatile ETF, meaning where even with very little movement can provide a significant gain or loss within your stock, within your options.
I see.
And the same thing if we go to the options volume leaders, we can also click on the ETFs to look at the most active individual SPY calls and puts, as well as the QQQ. Now, a lot of them are going to be expired, but at least we can maybe look at the ones that are not. At least maybe we can try to decipher, are the ETF investors and traders, are they bullish or are they bearish? So taking a look at the ones that are current, we have one call, there's a second call going down, there's a put going down, there's a call, and then put. So just from counting how many calls there is due to the amount of volume, and a lot of these, they're going to be a combination of day trading and maybe some swing trading. But it looks like a lot of them are continuing to be more bullish than they are bearish. Let's take a look at the percentages again with the ETFs on that. But again, a lot of it's going to be a combination of day trading and swing trading. And that's where we can see that the overall percentage ratios, that the puts are more greater with SPY and the triple Q. And but when we're looking at the individual calls and puts, we can see that mostly the calls are active. So really, it seems like the swing trading aspect of it are more bullish than bearish. So when we're doing the ETS, we have to do a little bit more deciphering a little bit so we can kind of get a clearer picture. But but that's why we recommend straddling things like Amazon, Apple, Tesla, because they'll have a lot less time depreciation than an ETF, so people can hold them a little bit longer without suffering as much time depreciation, because it's not going to be as close to its expiration date because it just doesn't have it as often. So hopefully that makes sense. But
thank you.
Yeah. There's been a lot of questions, though, about as we get more active, we'll see more people get frustrated about how come my order didn't get executed. Or and that's why we've had to adjust our rules a little bit, our guidelines, because it used to be buy our straddles 5 minutes before close. But we've had to provide more time, and now it's buy straddles 15 minutes before close to sell the next morning within the first hour. So that just gives more investors more time to try to buy in their calls and puts. But in some cases, some people are like, I got my calls, but for some reason my puts didn't execute, or I bought my puts, but my calls didn't execute. And a lot of people want to blame something. And a lot of people will blame their application when really it's not their application's fault. This is an operator error, and we need to fix that. How do we prevent an operator error? And so as you're going in there to try to buy and sell something, the stock price is still fluctuating. It's not waiting for anyone. You can't put it on pause. And so every application has some kind of tool where, for example, this is a screenshot of Webull. Robinhood has it too. But it's important that you understand the differences of these prices. And so with Webull, you'll see a limit price here. When you open it up, whether you're buying or selling, it's automatically just going to pick a manual price. It's just a set price. Now the stock price is still going to move up and down, so you may have to adjust it. Now, if you click on this little bullseye thing here, all of a sudden a menu will appear. All of a sudden, boom! It defaults it to a manual input. Now you can change it to either mid price, bid price, or ask price. But it's important that you understand all these differences of these prices. That way you can take advantage of the system and how things work. When you're looking at a share price, it's always the mid price. And what is a mid price, you may ask? A mid price is the price that's in between the asking price and a bidding price. Okay, so now what's an ask price and what's a bid price? So an ask price is a price that people are buying it at. It's the higher price, because if you're going to buy it at the asking price of what people are asking to buy it at, your order is going to execute immediately unless the price significantly changes by the time you send the order out. The bid price is what they're selling it for, and so which is the lower price. And so that is the price that your order is going to execute at the quickest. And so, but when you select any of these, you'll notice that the price on here will now change to whatever that the asking price or the bidding price is. So when you're buying, you need to select the ask price. When you're selling, you need to select the bid price. So that way the price changes while it's changing. Now, if you're on Robinhood, most likely it's going to be the bid price. So it's going to be right in the middle. So that means there's a 50% chance that it's going to execute. So half the time it's going to execute, the other half of the time it's not going to execute. We don't want that, because that means you're going to have to go back in there. You're going to have to change your order. You're going to have to modify it or replace it. That's just going to cost you more time. It's going to cost you more money. We need to get this to execute the first time. I used to say that if you're going to sell it for a couple pennies higher than you would if you're going to if you're going to buy it. It needs to be, or let me rephrase that. If you're going to sell it, you need to sell it for a couple pennies lower than what you would normally have. Or if you're going to buy it, you need to buy it for a couple pennies higher than you would have normally have. But if you're using this system here, this tool that these applications are providing you, it just automatically does it for you automatically. And so you just select it, and then you select how many contracts you want to buy or to sell, and you click your buy and you sell, and it just does the rest for you. And that way you can move on to the next thing. So that's why it's really important that you know the differences between all. Last price, that's just the last price of what it was the day before. So that is definitely one you want to avoid. You definitely want to focus on pretty much the ask price and the bid price the majority of the time. Now, within your application, you may have a setting somewhere where you can select that as a default. But for the most part, you're always going to want to just select it manually. Not the manual input, but you're going to want to either click that to pull up this menu and to select either your ask price or your bid price. So hopefully that makes sense. hopefully the ones that were asking that question throughout the week are here watching it. If not, this will be recorded and posted on our YouTube channel for your future reference. So so we went over that, IPOs, everything there. Let's see. Trading calendar. It's always a good idea to always have a trading calendar going into February. It looks like there is a holiday on February, Monday the 20th. So that's going to be a 4-day weekend, but you can also see other miscellaneous events. But it's always good to know, again, what's going to happen before it happens, no matter what it is. So hopefully this makes a lot of sense. Hopefully it'll anybody have any questions? Anything anybody wanted to go over? You may have to unmute your mic if you are speaking. Unmute your mic, that way you can talk. If not, I'm going to assume everything makes sense. You guys are ready to rock and roll. Let me just double check.
Can you guys hear me?
Yeah, I can hear you now.
I just want to say thank you so much for your time, and the class is amazing. Thank you.
Good. Thank you. Thank you very much.
You're welcome.
I did post something dividends. We don't talk about dividends very much, but I just posted something over the weekend about how to get paid dividends every month. It's really just if you're more of a long-term investor, as we're talking about potential dividend stocks, and you're looking at options activity. Not only do you want to hold stocks that are appreciating, but you also want stocks that are going to pay you a dividend every 3 months. And so, but with the right system, you can have it so that way you can have a stock like Chase or Morgan Chase that can pay you January, April, July, and October. While Starbucks will pay you February, May, August, November, and then Wendy's paying March, June, September, and December. And so, but I mean, it's a neat little thing, but it just takes a while. But so just know that a lot of the stuff that I post is always saved under our featured areas. And and then last week we did talk a lot about books. If you guys are into books, ebooks, we do post those often under our files area. So we have discussions, featured, reels. Those are kind of interesting little TikTok type of stock market videos, which is kind of neat media. But files, that's where we can go, where we can upload a lot of PDF books and stuff. So we do have Day Trading for Dummies, the Rebel's Guide to Trading Options, dividends, ebooks, and stuff that we've posted ever since we created this group back in in 2019. And so, but if you guys ever have something, feel free to upload it there. It just helps everybody out. Anybody else have any questions? Anything anybody wants to bring to the table? Or you guys ready?
I'm sorry.
That's okay.
Any questions? No, all good there. All right, guys. Well, thank you very much. I guess this concludes our meeting. We'll do it again next Sunday. You guys stay safe. Make great choices. Let's make a lot of money. Any questions? Just ask us in the group and in our live chat rooms.
Thank you very much. Thank you.